10 assets that are making people rich. Have you ever wondered why the rich always have money? What do they do to generate more and more money over time? Well, today we will show you the 10 assets that make many people rich. Before we start, subscribe to the channel and turn on notifications. This is Rich Revolution. Let's get started. 1. Dividend stocks. These stocks are characterized by the fact that every so often, typically every quarter, the company distributes a portion of its earnings to its shareholders. Let's say the company decides to pay dividends to its shareholders because it's a mature company that maintains steady profits. Generally, when the company starts distributing dividends, it grows, but not at the same rate as stocks whose primary goal is exponential growth. The stock price is $100. The company decides to pay $7 per share in dividends this year. This gives us a return of 7% if we live off what it will pay out relative to the price. In other words, the 10,000 shares owned by Sands will yield him $70,000 in dividends annually, divided into 4 payments of $17,500 per month. In this case, he would receive this income and maintain his primary asset, which is his ownership in the company that still has room to grow in value. Dividend stocks are one of the favorite forms of passive income, as the money invested in these companies is what does the work, while we can use our time as we please. 2. Growth dividend. Stocks are simply partial ownership of a company, making the owner a shareholder entitled to the company's growth and profits. They can be of a company whose shares are traded, that is, bought and sold publicly on the stock exchange, such as shares of companies like Apple, Amazon, Google, and others, or they can be of a private company, such as the supermarket on your corner. Let's say you know the business and see the growth potential of the company, so you decide to buy 10,000 shares. This makes you the owner of 10% of the company. Your investment was $100,000 because each share cost $10. Over time, the company continues to expand and make good profits year after year, and you continue to invest those profits. After 10 years, each share is now worth $100. This means that you increased your initial investment of $100,000 tenfold to $1 million in 10 years. To realize this gain, however, you would have to sell your shares. If you did, you would have a profit of $900,000 and a return on investment of 900%. 3. Real estate. Real estate is one of the most attractive assets for wealthy individuals. Buying and holding them for a long time has become one of the preferred ways to create wealth and earn passive income even while you sleep. They can take many forms, from a single-family home to a duplex, apartment building, office building, or even land. Generally, these properties will appreciate in value over time. In addition, when we rent out to tenants, we increase our wealth through both appreciation and rental dividends. However, it is not as easy as it sounds. Properties need repairs and maintenance to make them suitable for renting. They also carry the risk of non-payment by tenants. Choosing a property should be done with a lot of caution and analysis, as it may take months or even years to be able to sell this investment and get out of it. It's important to pay attention to the appreciation it may have due to projects and developments in its surroundings. Another way to invest in real estate is to acquire properties that are being sold below their intrinsic or true value with the intention of renovating them and then renting or selling them. 4. T-bills. Treasury bills are short-term financial instruments. They are public debt securities, such as short-term fixed income securities issued by the Treasury as a means of financing. Their maturity is usually between 3 and 18 months. If you want to save money and earn significant interest in just a few weeks or months, you may want to consider buying Treasury bills. This type of investment is popular and affordable. It is also simple and virtually risk-free. Many investors choose government bonds to preserve their capital. Treasuries are any securities issued by a government to repay a debt, which is why people consider them safe and secure compared to volatile stocks issued by private companies. 5. Art. Many people think that works of art are merely decorative objects. However, art can also be an excellent investment vehicle. Unlike many other assets, works of art do not lose value over time unless, of course, they are damaged. Instead, quite the opposite, they appreciate in value. That's why investing in art is so interesting. Furthermore, it is an asset that protects us during periods of high inflation or high volatility in global stock markets. It also serves as collateral for other investments. For example, if we want to make a real estate investment, we can use our work of art as loan collateral, allowing us to benefit from the leverage effect. And if you're concerned about currency devaluation, let me show you that art is not subject to exchange rate fluctuations. Works of art have an intrinsic value independent of the currency in which you wish to invest. 6. Patents. If you're not acquainted with the concept of a patent, it's a legal safeguard that arises when you create something entirely novel. By submitting a formal document known as a patent application, you establish yourself as the inventor and provide a comprehensive description of your invention's functionality. This patent document grants you exclusive rights, compelling companies to compensate you for utilizing or profiting from your innovation. In the event that they fail to do so, you have the option to take legal action against them. Patents hold tremendous sway and worth in the realm of business, as a solitary patent has the potential to generate substantial wealth. Bitcoin. When we talk about assets that appreciate and generate wealth, we have to mention Bitcoin. It's a digital cryptocurrency that was born in 2009. Its scarcity characteristic, with only 21 million Bitcoins that will be created worldwide, makes it a safe haven asset against inflation. Traditional currencies like the dollar, the pound sterling, the euro, and the yen tend to lose value over time since governments and banks can create them limitlessly. This means that, for example, a dollar today buys fewer and fewer goods and services tomorrow, while Bitcoin has consistently increased its purchasing power since its inception. Over the past decade, from 2011 to 2020, Bitcoin stood out as the #1 asset in terms of return on investment. It had an average annual return of 200%, far surpassing the NASDAQ index, whose average annual return was 20%. This significant difference in returns made it an attractive option for investors. Today, it's possible to buy Bitcoins on exchanges and store them in digital wallets. Another way to gain exposure to Bitcoin is through the purchase of exchange-traded funds that track the price of Bitcoin. To realize gains or losses, it's necessary to sell the Bitcoins at the right time. Furthermore, another way to make money with Bitcoin is by lending your Bitcoins in exchange for interest. This involves lending your Bitcoins to other users through peer-to-peer lending platforms or decentralized financial services, and in return, you receive interest on your loan. 8. Invest in the right people. You don't realize how valuable an asset people are until they're gone. Corporations are not really real. They are figments of our government-sanctioned imaginations. They are names, people, ideas, and innovation that happens within them. Under that imaginary umbrella, who comes up with all that? People. A single person can make or break a company with his or her ideas alone. The impact of replacing Steve Jobs with Pepsi successor John Sculley was so great that he nearly bankrupted Apple. Today, the technology brand is probably at an all-time low. There are teams that make the company their home. There are larger companies that have acquired others just to attract new people. Ideally, no one should be irreplaceable, but the harder some people are to replace, the more valuable they become as assets. So make sure they know they are valued. Hire the right people, treat them very well, and compensate them appropriately, and they will make you rich. 9. Commodities. This is similar to the dynamics of company stocks, whose prices rise and fall with the market and require strategic management. They should be bought when their value is low, held when there is significant demand, and then sold. This principle can be applied to various facets of life, ranging from different currencies to cryptocurrencies, oil, gold, luxury cars, and art, among other assets. 10. REITs. REITs, or real estate investment trusts, are real estate companies that own or manage properties such as apartments, hotels, offices, shopping centers, data centers, hospitals, multi-family housing, warehouses. They make money by renting out these assets. A characteristic of these REITs is that after a certain period of time, they must pay out a high percentage of their profits to shareholders in the form of dividends. You can make money from REITs in two ways. If you buy a share of the REIT company's stock, it can increase in value over time. For example, if you buy a share of REIT XY for $100 and it trades for $150 a year later, you have earned a 50% return. Add to that the $3 in dividends, and you have a total return of 53%. Undoubtedly, the great millionaires have their techniques to generate more money. Do you know some of them? This was Rich Revolution. If you like this video, subscribe to the channel and turn on notifications so you don't miss any new videos. See you next time.